Hello, this is Ed Burke with PlaceForTraders.com for Friday, May 15th. Starting off in the June Mini S&P. In my last video, I talked about the pivot level for Thursday of 892 and a quarter. Above 892 and a quarter in the June Mini S&P was considered bullish. Below 892 and a quarter bearish. I had the first line of resistance up at 904 and a half. The first line of support down at 873.75. Now these are 15-minute bars. This is where the regular trading session opened. You could see that prior to the regular trading session open, we were trading kind of sideways, staying below the pivot level, but still staying way above that first level of support at 873.75. You could see that after the regular trading session opened, the market started trading higher. I did send messages out to people saying the market looked like it was going to rally, to look to the pivot level as a target to get out of the market, to take profits on a long position. The market rallied, went over the pivot level of 892 and a quarter, actually went to a high of 894. I also sent messages out saying that this rally over the pivot level, do not view that as a bullish mode, that any rallies over the pivot level should be shorted or sold into. You could see that we went to 894 over the pivot level, then we sold back off, going down to this point. Then we had another rally going back over the pivot. To be honest, I was really surprised that we went as high as this, 896.75, but going right back into the close, the market sold off, went back down below the pivot level. The market settled at 889.5. I know that that's a little different. You know, I said sell any rallies over the pivot level. I just really couldn't see how the market could settle extremely bullish. You know, the market had stayed under the pivot level in a bearish mode for most of the day, and we had that weak job numbers. I just really didn't think any breaks above the pivot level were buying signals. I thought the pivot level should act more of a resistance. And the market did settle at 889.5. It was only up 4 and a quarter on the day from Wednesday's close. But for Friday, I'm looking at the pivot level of 888.75. The market closed at 889.5. We need to stay above 888.75 for a bullish market. Below 888.75 is bearish. I'm looking at the first line of support down at 880 even. The second level of support down at 870.25. For resistance, I'm looking at the first level of resistance at 898.5. The second level of resistance at 906 and a quarter. Also, I put these two weekly numbers in. They converge pretty closely with tomorrow's daily numbers. Weekly pivot is up there at 910.75. It's just above tomorrow's second line of daily resistance. And then the weekly support one, first level of weekly support at 891.5 is just above tomorrow's daily pivot at 888.75. Numbers coming out. A lot of numbers coming out at 8:30 a.m. Eastern Time, 9:15 and 9:55. At 8:30, you have the CPI, or Consumer Price Index. The expectation is for unchanged. The core CPI, core Consumer Price Index, the expectation is for a rise of 0.1%. Also at 8:30, you have the Empire Manufacturing Index. The expectation is for a negative 14. Then at 9:15 a.m. Eastern Time, you have capacity utilization. The expectation is for 69.1%. Also 9:15, you have industrial production. The expectation is for a drop of 0.4%. Then at 9:55 a.m. Eastern Time, you have the Michigan Sentiment Index. The expectation is for a reading of 65.2. That's all I have for this evening. Thanks for tuning in. If you haven't gone to my website as of yet, it's PlaceForTraders.com. You can go on there and sign up for the free alerts. Thanks a lot for tuning in. Good trading.